as Fibonacci levels can act as a form of key support and resistance. Support and resistance levels are areas where price has a high chance of reacting to or reversing from, all which again create high quality trade entry opportunities for you. Click on the chart, drag the tool upwards, and then click again to lock it in. Then to the right, your Fibonacci retracement levels will appear. Now these levels are important because they are the most widely used Fib levels by traders and represent areas of value within a moving trend. Let's say you are analyzing this current moving uptrend. You have your run, pullback, run, pullback, run. As you already know, an uptrend makes higher highs and higher lows. So if you are analyzing this run here and want to apply the Fib tool to find areas of value to enter trades long at, here's how it works. You grab your Fib tool, click where the swing low is at the bottom of the wick, drag the tool to the top of the moving trend and where the swing high is. You will then see the Fib level percentages appear to the right. If price were to pull back to the 50% level, this would represent a pullback of 50% from the recent swing high here. And if price were to pull back to the 61.8% level, this would represent a pullback of 61.8% from the recent swing high here. So let's show this in the opposite direction and in a downtrend. You have your run, pullback, run, pullback, run. As you already know, a downtrend makes lower highs and lower lows. So if you are analyzing this run here and want to apply the Fib tool to find areas of value to enter trades short at, here's how it works. You grab your Fib tool, click where the swing high is, at the top of the wick, drag the tool to the bottom of the moving trend and where the swing low is. You will then see the Fib level percentages appear here to the right. If price were to pull back to the 50% level, this would represent a pullback of 50% from the recent swing low here. And if price were to pull back to the 61.8% level, this would represent a pullback of 61.8% from the recent swing low here. Combining Fibonacci levels with key levels of support and resistance to increase trade quality. So let's do this right on the charts, but from our perspective at every step. You had your key level of resistance here, so you would have had it drawn in and extended out in case price reacted to it again in the future. After price broke out, this key resistance level then becomes new support, which means if price approaches this level, there are possible trade opportunities long. So how do we increase the trade quality of this trade opportunity? This is where the Fib tool comes into play. With the Fib tool, click at the swing low here, drag it up to the recent swing high, and look at that. The trade opportunity you identified is also right at the 61.8% Fib retracement level, which is a very high quality Fib level, as it represents a very deep pullback within the moving trend and a great area of value to get in at. So the combination of a key support level with a key Fib level increases the quality of the trade opportunity, instead of taking a trade with only a support level. Now, as price approached this level of support, you had no idea whether there would be a reaction to the level or not. You needed to wait for price action through candlestick formations at the area to show that price is indeed reacting to the level this time around. So when price reached the level, you had exactly that, which was a candle with a long wick sticking out, which shows a reaction to the level and confirms the trade opportunity long. Combining Fibonacci levels with areas of confluence to increase trade quality. This here is where the short trade opportunity occurred, as it is an area of confluence and access point. So let's break it down. First, you would have identified this as a clear moving downtrend, as price is making lower highs and lower lows. So you want to trade with the moving downtrend. You had your key level of resistance here because of this reversal point. You have your trend line here, and because it crosses with the resistance level, it makes it an area of confluence. You then have your moving average here. Notice how it intersects perfectly at the access point and area of confluence. So to increase the quality of the trade, we grab the Fib tool, click at the swing high here, drag it down to the recent swing low, And look at that. The trade opportunity you identified at the area of confluence is also at the 50% fib retracement level. So when price reached the level, you had multiple long wick candles sticking out and failing to break through, which shows a reaction to the area of confluence and confirms the trade opportunity short. So why is this a high quality short trade at this area of confluence? You had support and resistance traders looking to enter short. You had trendline traders looking to enter short. Moving average traders looking to enter short. Trend traders looking to enter short. Candlestick and price action traders looking to enter short. Confluence traders looking to enter short. And then also you had Fibonacci traders looking to enter short. All these schools of traders stacked at the area of confluence looking to take action, and in this case, take action and enter short trades increases the chances of the trade going in your favor, which means it is a high quality short trade entry. So let's start from the top again. Except now we'll be combining the usage of multi-time frames. This is the 8-hour time frame, and this is where the trade opportunity long occurred. First, you identified the key level here. Next, you had heavy bullish momentum because price broke the key level that previously held multiple times. Then, the moving average crossed, which is where the trade opportunity long presented itself. With the fib tool, swing low to swing high, and the fib zone lines up. This then gave you your area of confluence. When price pulled back to the area, you had a long wick candle with the wick sticking out, showing a reaction to the area of confluence. So in the last section, what we would do is we would put a trend line onto the immediate trend and wait for a break to occur before looking for a trade entry long. So let's pull up the lower time frame, specifically the 4-hour time frame, and put it beside this one. Here's the key level on the 8-hour time frame, and here is the same key level on the 1 hour. Here's the 8-hour pullback downtrend, where we tried to place the trend line but couldn't. And here is the same pullback downtrend on the 1-hour time frame. On the 1-hour time frame, we can easily place a trend line connecting these swing highs because again, on this time frame, we can actually see the swing highs and swing lows. And once you had the trend line break, this was your trend change confirmation. The 1-hour time frame turned from bearish to bullish and matches the 8-hour time frame big picture bullish directional bias. One more point as to why a trend change confirmation pattern and using multi-time frames is important. You could have easily had a long wick candle form and stall at the area of confluence on the 8-hour time frame here. But then on the lower time frame, price could have done this instead. Run, pull back, run, pull back. And instead of breaking out and through the trend line, started another run and continued on, triggering a larger trend change. So after you had your trend change confirmation breakout, this is when you need the final step of the formula, which is to go to the lower intraday timeframes and use our key entry and exit strategy and entry tool. This is the Bitcoin monthly time frame, meaning every candlestick represents 1 month of time. As we previously discussed, things you find on the higher time frames, such as the monthly and weekly, hold more weight. Now you don't trade on the monthly time frame. You only use it as guidance for trade entries you take on the lower time frames. So there were 3 high quality traits that gave us our clear bullish directional bias, even before we brought in other time frames. First, your key monthly resistance level turned to support. Price then broke through this very key monthly resistance level that held 2 times. Next, price was in a clear downtrend before price made a higher high, which shows a clear trend change pattern and a clear moving uptrend. Even before we go down in time frames, everything we just covered tells you one simple thing: look for long trades. This wasn't even on our radar until we saw the breakout momentum and heavy bullish presence that entered the market, which is then when it entered our watch list. So the chart on the left is the Bitcoin monthly time frame we just looked at, and the chart on the right is the Bitcoin weekly time frame. This was the monthly key level, and this is the same key level but on the weekly time frame. This is where the trade opportunity long occurred, which was at the key monthly level and now also the key weekly level. Again, things you find on the higher time frames hold more weight. So first, you had your very key weekly level. Next, this level that held 3 times previously finally broke through, which shows how much bullish momentum and buying presence had entered the market. Next, we are also in a clear moving uptrend through the higher highs and higher lows. We then had the moving average that crossed perfectly with the key level and is where the trade opportunity long presented itself. Next, with the Fib tool, click at the swing low, drag it to the swing high. And notice how the 61.8% Fib area also lines up with our trade opportunity. This then gave you your area of confluence. Remember that this is a level that is visible on the monthly and weekly, meaning there is a very high chance that price will react to the level. When price finally hit the area of confluence, you had candles with the wicks sticking out right at the level, which shows a reaction to the area of confluence. So as we previously discussed, we would usually try to place a trend line onto the immediate trend and wait for a break to confirm the trend change. We need to use a lower time frame to look inside of this pullback where we can actually see the swing highs and lows of price, and then be able to look for price action that shows a trend change from a downtrend to an uptrend. Here is the weekly time frame area of confluence. Here's the same area of confluence on the daily. Now on the weekly time frame, notice that you couldn't see the swings of price, whereas on the daily time frame, you can clearly see the swing highs and lows and movements of price. So again, we are looking for price action that signals a trend change from a downtrend to an uptrend, and we got this trend change pattern in 2 forms. The first is the trendline break. On the daily time frame, we can easily place a trend line onto the immediate trend like this, and then once you had that trendline break, this was your first trend change confirmation. Now, secondly, you also had a higher high, which is another trend change pattern. Run, pull back, run, pull back, run. But notice how this run here failed to make a lower low, but instead made a same low, or a double bottom, which shows a loss of momentum. And this all occurred at the weekly and monthly level. Clear lower highs before price finally broke through the trend line and made a higher high, which is again another trend change pattern. So after you had your trend change confirmation breakout, all things are a go. This is again when you need the final step of the formula, which is to go to the lower intraday timeframes and use our key entry and exit strategy and entry tool. This was a very high quality A+ trade, almost picture perfect.